We want Dominic Alafaci. Good morning.
Good morning, Darren.
Great to see you. Have you got a market update for
I
us?
certainly have. It's been quite an interesting roller coaster ride, but following a very strong start to the year across all US indices, we saw the Dow Jones Industrial Average give back almost 1% overnight to 44,319 points, while the Nasdaq dropped 1.3% to 19,540, and the S&P 500 closed down 1% to 6,025. Across the Atlantic, London's FTSE lost 0.31% to 8,701 points, with the French, German and Italian bourses following suit. Gold continued to flirt with record highs, putting on $10.40 to $2,887.10 US a troy ounce. West Texas Intermediate closed 93 cents higher to $71 even a barrel, and Brent crude was 35 cents higher at $74.64 a barrel. And the a dollar, I should say, is slightly lower against the greenback. It's currently buying 62.71 US cents in trading, with the ASX 200 SPY 61 points lower, pointing to a lower start on Monday, following yesterday's effort where our market was slightly weaker, giving back 9 points to end the session at 8,511.
Excellent work. By the way, the lines are open. 133 693. Any financial questions for Dominic Alafaci, who's been working in the money industry since you left school, haven't you?
Oh, not quite. Since I left uni, actually.
I've left uni, that's right.
It's 44 years ago.
Wow.
It's funny, I was in Sydney at a conference the other day, and the Microsoft and a company we use, Fin365, which is like our finance CRM, and I was blown away because I met a mate of mine at a coffee shop in Grosvenor Place, and a wave of emotion came over me. I said, Dan, you're going to believe this. 38 years ago, I had a coffee at this same place, went upstairs to the big building in Grosvenor Place, and got my first job at Bain & Company back in 1980-something or other. So
in Sydney?
Yeah.
How long were you there for?
No, that one was...
okay.
I had to get interviewed by the chief bottle washer.
Oh, okay.
And before they'd give me a Guernsey in Melbourne. So, yes, it's just time's flown.
Hasn't it?
Yeah.
I'm the same. You look back and you think, whoa, are we that old? And is that what's happened so far? It just goes, doesn't it?
It
and
does.
That's why you've got to plan for your retirement before you know it.
And I'm getting lots of questions on, what are good investment returns? And I thought I'd just print this out for you. I mean, we've had a terrific, last 12 months, 2 years between, 7 and 18, nearly 20% in some cases. They're sort of good returns, and people are very attracted to them. But the longer term returns, you really should think between 4 and 10. We're really spoilt at the moment, and I don't want people to think, if I invest my money, I'm going to get 18% compound for the next so many years. It's not going to happen.
No.
You probably get 10s if you're lucky. And it's been sort of pushed upon us because our retirement savings are now in our control. In the past, where you work for a big company, you would get them to take all the risk, or the government. They'd pay you a pension at the end of your working life.
Yeah.
But about 25 years ago, all of the companies and the government, probably 30 years ago, started pushing the decision-making over to the individuals and saying, you're now responsible for your well-being going forward.
That's right.
We're not going to give you a guaranteed pension.
Yeah.
And it's changed the landscape tremendously.
Okay. Michelle has called through. Good morning.
Good morning. Dominic, my parents are looking to reverse mortgage on their property, and they were going to go through Centrelink through the government. I heard recently that that's probably not a good option. Is that correct?
Look, there are two schools of thought on this. I quite like reverse mortgages. If they're well structured, and I believe the government one's pretty well structured. It's low cost, and what it basically means is, for listeners who don't know, instead of a mortgage being something that you pay the lender back every month, this is a reverse mortgage where you let it accumulate. So if they give you $10,000 or $50,000, instead of paying $1,000 a month for 10 months, or $1,000 a month for 50 months in the example of the 10,000 or the 50,000 plus interest, you let it accumulate. So when you pass on, the value of the property with the last remaining person is allocated towards the lender. So the 10,000 in this case, let's say they took that much plus interest, might go up to 30,000 if you live really long. But if it exceeds the value of the house, the lender takes the loss. So I don't mind that. There are other ones that are out there, but I prefer a reverse mortgage.
Yep. So the government one's okay? Or
Yeah, they've
do you
looked at
reckon
it's
other
actually
people?
quite good. It's quite modest. You
There's
can't.
some that you don't like, though.
Well, yeah, there are some companies have got very greedy terms and conditions.
Right,
Some
you've got to be careful.
You do, and there are other ones where you sell part of your front room. Let's say, not necessarily. You might sell 25% of the house.
Yeah.
and they become a co-owner of the house.
Oh, yeah. that
Some of them
sounds-
are okay too, but
Yeah.
the ones I've seen have just been a bit too Wall Streetish, a bit greedy
Yeah,
on the poor
right.
punters. But look, I'm sure, do your homework and speak to a mortgage broker if you want to go outside the government one. But I think the Centrelink version is quite easy to do and low cost.
Thanks, Michelle. To Eva, good morning.
Good morning, Dominic. Yes, first-time caller.
Hello, Eva. How are you?
Yeah, good, thank you. Yeah, look, just let you know that we sold a property in December last year.
Yep.
And we have some capital gains on that, like about 100,000. And we believe that someone's told us that you could offset this with a super fund. We're both retirement age, 62, so we can
That's correct, Eva. What you can do, and you need to get some detailed personal advice on this. It's not that complex, actually. But would you have more than 500,000 each in super?
No, we don't.
Okay, good.
We don't have super.
Oh, if you don't have super, well, then this is ideal. You can make what's called a concessional contribution to super, and you can make several of them up to the limit. So the limit will probably average out around $26,000 each year. So if you haven't reached that limit for each of the last, say, 5 years, you could effectively wipe out all of your capital gains. So it is true you can do it. And secondly, if there are some conditions, like you've got to be a certain age and you're under 75, tick that box. You don't have heaps of money in super, you have none in this case, so tick that box. And you're able to make these concessional contributions to super that you can use the proceeds of the sale of the house, let's say, put it into a super fund and you'll get a tax deduction of more than the normal $27,500. It'll probably average around $26,000, depends how many years you can go back. Okay?
Yeah, thank you. Thank
Pleasure.
you very much.
Good on
Great.
you. Thanks, Eva. 133693 is the number. We've got Dominic Alifaci from Collins House with us right through until 10. Dominic Alifaci is here. Do you still need, $1 million to retire on, give or take?
Yeah, it depends on if inflation comes down a bit, because there's been so many increases in the core things that we need, like electricity and other services.
Yes.
It's really difficult to, I'd say 800 minimum.
David joins us. Good morning.
Yes, good morning. I have a question for Dominic. I'd like to ask, my wife and I are both pensioners, and my wife inherited quite a few Commonwealth Bank shares quite a while ago.
Yep.
If she wanted to sell a small number of them, say 10 or 20, how much tax would she have to pay on them?
Well, the capital gains tax time bomb starts ticking at the date of death of the person that left the shares to your wife. So let's do a simple example. Let's say you inherited something worth $10,000 10 years ago.
Right.
Okay? And now they've gone
Right,
up to $15,000. So
Right.
you've got a $5,000 gain.
Right.
Half of that,
Yep.
$2,500, goes on your wife's income tax return. So my guess is, if it's only a small number of shares, so how many shares did you say you wanted to sell?
Well, she's got 800, but
Yep.
we just thought we'd start getting rid of a few because we're getting on.
Well, let's say you average $150, $160 a pop. So let's say I'll do 155. I think they're $163 at the moment. But let's say 155 you do, and you've got 80. So if you sold a whole lot of them, you'd have $12,500.
Did you say 80 or 800, David?
800.
Oh, sorry. So it'd be 124. But if you sell, let's say you sell 10%. Every year, you'll have $12,400 in your pocket, and you won't be paying any tax because it's under the tax-free threshold. Because everybody can. There's a tax-free threshold, and then there's a special amount you can earn over and above the age pension. So you probably pay a bee's whisker. I won't say what I was going to say, but it'll be so immaterial. But you know what you should do, David? Give your local centre, oh, no, sounds ridiculous, but go to your local Centrelink office and ask for a FISO officer, Financial Information Services Officer, to do a quick calculation for you. It's free, and they'll let you know whether it's 50 you can sell or 20 or 100 without
paying tax.
Yeah, beautiful.
That's good. That's good news for you, David. Good luck. And Dominic, 800 Commonwealth Bank shares. That's handy, isn't it?
Oh, I know. Nice little learner.
Nice little learner. Lovely to see you, my friend.
Me too. Lovely to see you, David.
Yeah, good on you. Dominic Alafaci there as we approach 10 o'clock. Cars next with Paul Gover. Got any questions? You know the number, 133 693.